Hello, I'm Charles, and today I'm going to be reviewing the Ethereum cryptocurrency. I'm not paid, sponsored, or affiliated with any of the projects discussed in this video. All the views expressed in this video are my own personal opinions. Goes without saying that I am not a financial advisor, and it's very important you do your own due diligence. Be sure to subscribe to my YouTube channel and of course hit that notification button, because investing in tokens and cryptocurrencies is time critical, and it would be such a shame for you to watch all my videos only to miss out on the latest coin offerings. So in today's video, I'm going to mix things up. I'm going to do things a little bit differently. The format's going to be different because if I'm going to be talking to you about a project in the top 5 or the top 10 cryptocurrencies, my current style, my current methodology just won't cut it. Okay, Ethereum would probably get a 10 out of 10 with my traditional markings. So I'm going to give you a full SWOT analysis, a full SWOT assessment of the Ethereum protocol. I'm going to be talking to you about Ethereum strengths, its weaknesses, its opportunities, and really its threats going forward as a blockchain company. The video is going to be divided into 4 sections. Within each section, there's going to be 6 subsections. So I'm going to be talking to you about 24 separate points, each relating to the SWOT analysis. Now, I'm assuming that most of you have a very, very good understanding of Ethereum and how Ethereum works. But if you're new to cryptocurrency and you don't know anything about Ethereum, it's important I give you a very quick introduction to what the Ethereum Corporation is all about. So Ethereum is actually a blockchain-based distributed computing platform programmed to run smart contracts without third-party interference. Many supporters and proponents of Ethereum view the project as a paradigm shift in economic and social thought. Users can move value around and represent the ownership of property using tokens and smart contracts. As you're all very aware, Ethereum has been on a downtrend for most of 2018. From its peak price of $1,400 at the start of the year, Ethereum has failed to maintain a stable value. The token already dropped to $800 by the start of February and fell to a further $400 at the start of April. Despite a small bull rally, Ether is now worth $200 at the time of recording. So I'm sure you're all wondering what I'm going to be putting on this big black screen. Well, of course, I'm going to be giving you a SWOT analysis. So in the first part, we're going to be looking at Ethereum's strengths and really what it wants to achieve. So I think the first thing that stands out for many people, many researchers who are looking into Ethereum, is the amount of dApps that are already operating on the protocol. There are more than 1,860 decentralized applications already operating on Ethereum. The second thing to like about Ethereum is its mainstream appeal. You only have to look at someone like Steve Wozniak, the co-founder of Apple, who said that Ethereum could be the next Apple Corporation. So Ethereum is starting to gain a lot of traction and a lot of awareness in the tech scene outside of crypto, and I think that is a very, very good sign. The third thing to note with Ethereum is that the combined value of all the tokens and dApps running on top of the Ethereum blockchain far outweigh its market cap value. Out of the top 100 cryptocurrencies by market capitalization, 94% of them are built on top of the Ethereum blockchain. Out of the top 800 cryptocurrencies by market capitalization, 87% of them are built on top of Ethereum. So Ethereum, in many regards, is really the main player in the crypto space. It's almost got a monopoly, a hold over not only ICOs, but smart contracts in general. The fourth thing to be aware of when looking at Ethereum is really the Ethereum Enterprise Alliance. The Ethereum Enterprise Alliance, the business arm of Ethereum, built for dealing with industry players, lists JP Morgan, Microsoft, Intel, BP, Accenture, MasterCard, and Cisco Systems as partners on its website. So I think there's many key players operating with Ethereum in the cryptocurrency space, and that's a very good reason to be bullish on the Ethereum project. The fifth thing I noted when looking at Ethereum is that the project actually focuses on its fundamentals and blockchain tech over cryptocurrency hype and mere tokenization, and has really fostered a large and loyal developer community. And we can really see this in the leadership with Vitalik Buterin and the principles that it wants to aspire to. And the sixth and final point when it comes to discussing Ethereum's strengths is really its value proposition. Ethereum's strongest value proposition is its open source availability. This, coupled with the fact that it's Turing complete and stateful, means that developers don't need to reinvent the wheel to launch their own cryptocurrencies. So there's many things that Ethereum's trying to achieve. Currently it's Turing complete, it operates with state channels, and of course it's trustless, although I'm very skeptical of that term because you're actually trusting the technology. So in theory it's not actually trustless. But anyway, that's a subject for another video. And now we get to the weaknesses, and this is really my favorite part because I like putting down good projects. So there are many things I don't like about Ethereum. Indeed, it was only the other week that the CEO of BitMEX, Mr. Arthur Hayes, labeled Ethereum a shitcoin. So the first thing you have to be aware of when looking at Ethereum is that it lacks user adoption and faces many scalability issues. It can only accomplish 15 transactions per second versus Visa's 24,000 transactions per second. So scalability has always been a big issue for Ethereum. Whether they can follow through on their promises and execute on the dates outlined in their roadmap remains to be seen. The second hurdle that Ethereum has to overcome is its lack of utility. Mr. Rubin, a writer at TechCrunch, made the argument that the Ether currency will be decoupled from the Ethereum network, thereby rendering the Ether coin useless. Rubin actually argued that the price of Ether could actually drop to zero if Ethereum dApps started paying miners for transactions in other cryptocurrencies. The third concern I have with Ethereum is really its lack of reliability. So there's no better case in point than the recent CryptoKitties slowdown of the Ethereum network back in December. We can just see that Ethereum is light years behind Visa and MasterCard and all the other fiat industry players. I really do think Ethereum is trying very hard to achieve its goals, but it remains to be seen whether it can do that in the medium term within the next 1 or 2 years. The fourth thing I think many people don't like about Ethereum is how it's been viewed as a centralizing force. Vitalik Buterin and the Ethereum Foundation are a centralizing force and mitigate the effects of decentralization. This was actually a point raised by Charlie Lee, the founder of Litecoin, on Twitter. And I think that's a very, very good point. What's the point of having a corporation, a company that's supposedly decentralized and operates autonomously, if you're going to stick a human head on it? I mean, let's get real here. Cryptocurrency is all about not having third-party interference, and having a speaker for the cryptocurrency, although it has its merits, actually works against blockchain. And this really latches on to the fifth point I have with Ethereum, which is miner centralization and miner cartels and miner oligopolies. So according to the EtherChain Blockchain Explorer website, 4 to 5 miners actually control 51% of the Ethereum blockchain. This increases collusion among miners and decreases decentralization, and it's not good enough. If people are putting money into the Ethereum project, we really want to know how long it's going to take for us to transition over to a proof of stake consensus mechanism. A proof of work mechanism with miners isn't good enough. And the final point I have against Ethereum is that decentralization is not baked into the ERC20 smart contract. Let's face it, token creators can actually determine the parameters for their ICO or for their token sale. The token creator or contract owner determines a parameter and inner workings for the token. It could be deflationary. They can mint new tokens. They can pause upgrades. In other words, they can do whatever they want. ICOs are only as good as the developers that create them. And there are many, many examples. You only have to look at something like Centra or the recent Envian ICO to know what I'm on about. And of course, I was very critical with those projects, and I pretty much said they were scams when I reviewed them, or they at least had a lot to answer for. So now we get to the third section of the video, the opportunities. I could have actually put in a lot more here when it comes to discussing where Ethereum is going to go moving forward, but let's just focus on what we've got in front of us. So the first point I have for you is really proof of stake. Ethereum, as we all know, is going to be transitioning from a proof of work to a proof of stake algorithm called Casper between 2019 and 2020. Casper won't replace hardware mining completely. Instead, power will be shifted to the people who hold the most Ether. The Ethereum network post-Casper will rely on stakers and staking pools instead of miners for its operability. So of course that's a very good thing, and I think that's really going to make Ethereum stand out when you compare it to its competition, Proof of Stake and Casper. And this really brings me on to my next point with regards to Plasma. So we've got Joseph Poon and Vitalik Buterin, who are developing an off-chain scaling solution called Plasma. Plasma creates child chains or mini blockchains so that any malicious activity on a child chain can be halted by bringing funds back onto the Ethereum main chain, making the process more secure. So I don't want this video to get too technical. There's lots and lots of information online about Plasma, and I certainly recommend that you go out there and look it up. It's very interesting. And the third point is obviously sharding. So sharding is just a concept that allows for fragmenting or breaking up the Ethereum network into more efficient pieces. So it's quite a complex idea. And the whole purpose of sharding is to increase the blockchain's overall load and throughput. So sharding will actually be implemented sometime after the Casper proof of stake upgrade. And I think the fourth point that really ties all these things in together, and the reason why Ethereum is really so popular, is that Ethereum has never really been about making money. Let's face it, Ethereum never was the Lambo cryptocurrency, was it? Ethereum's always been about functionality, and we can actually see this in its founder, Vitalik Buterin. Ethereum is building a transformative framework that has many parallels with today's version of the internet, and we really have to look at its token structure to understand Ethereum a little bit better. The Ethereum blockchain uses two protocols to transfer value. On the one hand, you have fungible ERC20 tokens, which are interchangeable, uniform and divisible, just like fiat money. And on the other hand, you have non-fungible ERC721 tokens that hold information instead of value, such as passports, land deeds, or birth certificates. The recent Cryptokitties token is an example of a non-fungible ERC721 token. Unlike fiat money, the Cryptokitties token is unique, non-divisible, and not interchangeable. Indeed, Cryptokitties is just like a passport or a birth certificate. You can't make duplicates of it. So Ethereum really is trying to create a legacy, and I think many crypto purists and many diehard Ethereum fans know this. And this is really why Ethereum is number 2 in the crypto world, because while interest in ICOs has actually dampened the price of Ether, the Ethereum blockchain remains a blue chip crypto for many digital currency maximalists. And of course, you can't be a blue chip crypto without having partners and industry players to help you along. So Ethereum's affiliation to Microsoft Azure and the latter's partnership to Consensus paves the way for more future deals involving Ethereum. Back in August, Microsoft quietly announced the launch of the Ethereum Proof of Authority protocol for Azure, which allows users to deploy and configure smart contracts in minutes using the Ethereum blockchain network. And of course, Ethereum is also affiliated to Deloitte, BP, and AMD. So now we get to the most interesting part of the video, the threats, the challenges facing Ethereum moving forward. So I think the first limitation of Ethereum is really its programming language, its coding language. Solidity. Smart contracts and competing platforms are coded in languages most developers are already familiar with. Solidity as a programming language isn't the easiest thing to learn. And then we got the speculators, the VCs, and this is one of the reasons why Ethereum has been plummeting in price. Venture capitalists that invested in ICOs back in November and December last year are feeling the pressure, which is causing them to cut their losses. They will first dump their ERC20 tokens, followed by their Ether. And that's why Ethereum is the price it is now, $200. I can't really make it any simpler than that. However, there is also a second point to be aware of, and that, of course, is FUD. So you have a lot of ICOs basically dumping their Ether. Ethereum's market cap is a reflection of the ICO market. ICOs are losing money day by day. This is because ICOs are dependent on the fiat value of Ethereum. There is no income or price to sales ratio. You can look that up on Investopedia if you don't know what a price to sales ratio is. I recommend that you do. ICOs have to sell their Ether reserves to maintain daily operations, staff, marketing, etc., which consequently causes the price of Ether to plummet. And all this speculation and FUD was actually outlined by a research group called Sandbase that found last month that 57 ICO projects collectively sold 125,000 Ethereum in the month of August. I think the biggest threat when it comes to Ethereum's future value is actually shorting from institutional investors taking up futures contracts, which of course is driven by FUD in the traditional cryptocurrency community. So the Chicago Board Options Exchange, the same platform that launched Bitcoin futures back in December of 2017, is waiting for a green light from the Commodities Futures Trading Commission, or CFTC, to launch Ethereum options by the end of this year. Ethereum futures contracts pave the way for mainstream financial firms to aggressively short the price of Ether. These investment firms don't have to buy the underlying asset. In other words, they're just buying the futures contract of the Ethereum currency and not the Ether coin itself. So there's no risk on their part. Of course, you could argue it goes both ways, that you can also go long on Ethereum through futures contracts. But for me, the glass is half empty and it's not looking good if that does take effect. And I think the final concern for Ethereum is really its competition. So Ethereum might have first movers advantage, but we've got Neo, we've got EOS, we've got Icon, we've got Cardano, and we've also got Rootstock. And let's not forget all the other small players like Zilliqa, Waves, and Qtum. All of these blockchains are competing in the same space as Ethereum. So, where do I see Ethereum in the next 2, 3, 5 years from now? Well, as I've said in my previous videos, in order to understand something objectively, we really have to look at it in terms of first principles. So, what is a first principle? Well, a first principle is just a basic foundational self-evident proposition or assumption that cannot be deduced from any other proposition or assumption. So you're probably thinking, well, hang on a minute, Charles, what's this got to do with investing in Ethereum? Well, people want to be made to feel important. They want status. In other words, people get attention for themselves when they perpetuate the dominant trend. And that's why you see many YouTubers and cryptocurrency commentators saying that Ethereum's going to go down in value because we're in a bear market. In the bear market, you follow the bears. In the bull market, you follow the bulls. Not to do so makes you a contrarian. So what I'm really trying to say is, don't listen to anyone. They're all full of shit. The fact of the matter is, nobody knows what Ethereum's going to do. It could go up, it could go down, it could just range sideways. Nobody's got a clue. And I think for me, as an investor, moving forward, there's really 3 things I want Ethereum to do for me to feel confident and start throwing money at the Ether project. So the first point is ICOs. I want to see ICOs launched on the Ethereum blockchain with a price to sales ratio. I want to see ICOs generate an income in fiat and not rely on dumping Ether for their day-to-day operations. That's just a joke. The second thing I want to see in Ethereum for me to start throwing big money at it is that I want to see a deadline for Ethereum's transition to proof of stake. I want to see set dates for sharding and Casper in its roadmap. I don't want to see, in the third quarter or fourth quarter of 2019 or 2020. That's just not good enough. And the final thing I want to see in Ethereum is a little bit of centralization. Yes, that's right. I said the C word. I want to see Ethereum create a governance structure that polices Ether dumping by ICOs. In other words, I want to see a mechanism that stops ICOs from all dumping their Ether at the same time. That's going to stop all these price swings that we're seeing in Ethereum at the moment. So thank you so much for taking the time out of your day to watch my video. I really do appreciate it. Make sure you subscribe to my YouTube channel and of course hit that notification button because investing in cryptocurrencies is time critical and it would be such a shame for you to watch all my content only to miss out on the latest token offerings. Make sure you join my Telegram group. The links are down below for you. And of course, let me know what you think of this new format. It did take me quite a while to put it together, so it's not something I'm going to be doing on a regular basis. And of course, my traditional chart will be coming back when I see a project fit for reviewing. Thank you for watching, and I will see you in the next episode.